Good afternoon, everybody. I'd like to get right to it tonight because, as I often do, it's probably just a little bit too much to go through here. And tonight might be a slightly different format. I'm not going to go through and do a whole lot of examples or a whole lot of proving of things. This is more going to be an informational concept and a longer list of things to look at. I think it will be very helpful. The title, of course, as it suggests, is Best Tips for Newbies. As always, even though I say it's kind of for newbies, I find that people from all experiences will probably benefit from it to some degree. But it is kind of steered toward what I would call newbies. And by newbies, I don't mean that as any kind of a bad term. I just anybody. The definition is anybody who's trying to learn a new skill. And I know there's people that really range out there from who've been kind of maybe just hacking around at it themselves for 10 days to 10 years, to people who have taken some kind of an education to learn what to do, to people who are wildly successful, to people who think it can't be done. So I just want to run through some really great tips and ideas about things that we can do. Best tips for newbies. This is emailed to you. I don't think I'm going to read that, but a couple of things that I will be doing is at the end, besides going through 10 actual tips, they're numbered 1 through 10. I'm going to also suggest to you a handful of videos. As I think you all know, on the DTS page, homepage, there is a page called the DTS Free Stuff page. And there are all kinds of videos on there, including videos of all the events I've ever done for over 3 years. And there are really no duplicates. So they go back a ways, and I'll walk you through that when we get to the end. But since there's so many, I had somebody ask the other day, gee, where do I start if I'm brand new? So I went through and I tried to pick 6 of what I think are the best videos to watch if you're kind of new and you like what tonight's topic is about, kind of how to get started, some of the pitfalls, that type of thing. Naturally, if you look at all the titles that are out there, you can kind of understand what most of the topics are. Some of the topics that I've done are more technical type things, talking about very specific technical type concepts. Some of them are more general, like what tonight is going to be about. This was sent to you in the last email just this afternoon. You probably didn't read it because you were busy. But it says, so now that it is finished, meaning the slides for tonight, this may be a little boring, but hey, the last few presentations were really great. And by the way, the last couple, 3 presentations were a little late on getting to the site or on YouTube. We were redoing some stuff, so they are out there now, and you can go back and get those. They are some really good ones, I think. We had the 3-legged stool, and we had understanding the market on an intraday basis. I think some really good stuff. So feel free to go and take a look at those, and I'll review where those are at the end here as well. 10 tips, a list of best videos, and a discussion about ways to try to make it one way or another. Trading is a great opportunity for all. It is not what a lot of people envision. The more I talk with people, the more I realize that many of the basics are very misunderstood. I didn't put it on there, but I also kind of wanted to put the comment that perhaps I occasionally get a little bit out of touch. Sometimes I almost hesitate to say things because I think, well, people know that. And I don't know why, but the last couple, 3 months, I've talked to more new people than ever. And there's a very common theme out there. People that I think really don't understand at all what either long-term or short-term trading is about. Again, at DTS and Paul, like both long-term investing, and there's a service for that, and also day trading, there's a service for that. And naturally, in case you don't know, you also can take an educational program. I'm not here to push that tonight at all. As a matter of fact, I'm here to tell you how to attempt it on your own or give you some tips for that if that's what you choose to do. But I keep hearing things from people that are just kind of almost scary to me about how they want to manage money and some different things. And it helped me to develop what I consider to be this top 10 list. Naturally, they're all not going to apply to all of you. Some of you may think it's almost comical, but for a lot of people, these are really, really important topics. Before I get to the list of 10, I just want to mention something here because I think it's really important, and it's an understanding of yourself. One of the things that you really have to do is decide what you want to do. As you know, I set up a lot of stuff to really try and help people who are either just not ready to really get into this full-time, and by full-time I mean studying full-time. I don't recommend anybody ever tries to leave and become a full-time trader or investor just on the rip. I tell people not to do that. But in terms of really dedicating yourself to learning it, so you can either make money part-time or switch over to full-time over some time, that's great. But you have to understand yourself and you have to define what it is you want to do exactly. I feel that there are really three types of people when it comes to learning something new. This is not out of a book. This is from me working with people for many, many years. Number one, some people simply do not make any effort to really learn. They assume they will figure it out and they fail fairly quickly. This is a small percentage of the people. I don't think many people are truly like this, but there are some people who just kind of think they, look at a video and, oh, this doesn't work. Okay, I lost a lot of money. Let's go on to the next thing. The second group, some people feel they are smart and have been very successful and have done so by rolling up their sleeves and working hard. They feel they can teach themselves any topic, especially with Google. Google's great for a lot of things. Boy, I got to tell you, if you want to do something anywhere, pull up 32 videos from professionals in the field, and it's really, really good. I am in this category by nature. Okay, I am in this category by nature. This is most people, I feel. This is most people, at least most people here listening to me anyhow. Some people who are successful focus on one thing at a time. They make good money at what they do and feel it is a waste of their time to do any task that does not directly take them to their goal. They hire others to do their landscaping, cleaning, and everything else. They feel everyone has an expertise. And when they go to learn something new, their first step is to look for an expert in that area and learn from them. They trust this person and do not try to override them with their own beliefs. This is also a fairly small percentage of the people. I don't know if any of you are like this, but I've had some people like this. And it always kind of, I'm in admiration of these people because that's not the way I've really been, at least by nature. And I think once in a while, I just recently, not often, but probably twice in the last 4 months, somebody signed up for a seminar program that I really didn't even know. Just kind of, so usually people are around for a while, and at least I know the name or email. Just kind of out of nowhere, explain where he heard me. One person was referred from a friend. One person just kind of, loved my videos and got to like me, listen to the videos, and just completely immediately signed up and they were new, and they just immediately signed up, turned themselves over and said, here we go. And I think there's some good admiration for that type of person. If you noticed, I said I was in the second category, and I thought it would be worth our time for a couple of minutes to hear my story. I've told this before, but not in a long time. So I want to give you a little feel for what I did when I started. This is, 20 years ago. I hate to even say those numbers, but it was over 20 years ago. And I had sold a business, had a little money, wasn't able to retire, so to speak, but was able to maybe do something a little different. So I got involved, and I think I mentioned to you, I just heard a commercial. I got involved on, it was actually originally Wade Cook that got me interested in the market. I had no market experience whatsoever. And I think I told you not too long ago that, basically he referred to the fact that stocks go up and down as much every few weeks as they do the entire year. They just go up and down. And that really hit home with me. But anyways, my basic thing was I got involved, and I went to a free thing of his. And of course, at the end is the big, it's just a sales event. And boy, if you ever had that feeling like you're being herded to the rear like a bunch of cattle, I couldn't believe the people stampeding. This is 20 years ago. When the market was kind of new to people, day trading was new. There was, not a lot of places out there. And, people stampeded to the rear, and I just kind of chuckled, and I said, well, I'm certainly not signing up for this, but it's piqued my interest. So I went out and studied, and I started off in options, and I self-studied, and, options you can learn on your own. And then I went and learned technical analysis on my own, and I felt I was sufficient, just like anybody who is used to being fairly smart and teaching themselves. And I went out and learned and did what I had to do. And I was trading, and I was doing it full time, using mostly options. And I was probably about 4 months into it, maybe. And I was just kind of break even, which probably was a good thing looking back. And then I got into some positions, and I remember they were oil stocks. I don't really remember if I was long or short. I was probably short. And they really went against me, like in a pretty bad way. Like I was down a lot more money than I envisioned I would be down. Have you heard this story recently? So I'm self-taught. I felt pretty confident, felt pretty smart, and all of a sudden I'm down a lot of money. And if you any of you ever been there before? It's like everything's fine and dandy when you're doing well, you're up a little bit, you're down a little bit. But you ever been there where you're really in a little bit of pain? Anybody? Number one on the screen? If you're not typing a number one on the screen, you're either a liar or you've never traded in your life, one or the other. But the first time that happened to me, here's what happened, and it really came to a very clear focal point all of a sudden. It was a Friday afternoon, and whatever my position was, it reversed and started to come back. I was down a lot of money, and it started to come back. And there was actually a point on a Friday afternoon that I was kind of break even, which was really just, you know, to me, a wow. And as I went to exit the position, I said to myself, and it's funny because I kind of had the knowledge back then, even though I was very new. I kind of said to myself, hey, I got into these positions for a reason. Why are you getting out now just because they're going in your direction? Why are you afraid? But that wasn't really the point of the story. The point of it was when I was deciding whether or not to get out or stay with the positions, I decided very simply I'd look at the charts and that I would determine what to do. So I looked at the charts, and these are oil stocks, and I looked at them, and I looked at them once, I looked at them twice, I looked at them on daily, weekly, hourly, 3-minute, 4-year, turned the monitor sideways, I stood on my head, had a shot of whiskey, not really, I don't drink. What was my problem? Why was I like this guy right here? That's what I looked like, I really did. Why was I like that? Does anybody know? Well, yeah, there are emotions there, but that wasn't why I got like that. Well, it's not just that the charts were inarticulate, and it wasn't necessarily they had no correction. I didn't have a clue what I was looking at when I had to be honest with myself. I really didn't. You think you kind of know what you're looking at, yeah. And then when the pressure's on and you have to make a big money decision, and I'm sitting there looking, I go, what am I looking at? What does this mean? What's going on? And that's when it struck me, this is a little dumb. And that Monday, I just signed up for a class. And back then, I have to tell you, it was very archaic learning. There was one class, and it was, it was, I would consider to be about a tenth of the information that I would provide now. But you know what? It was the thing that started me in the right direction and gave me a clear objective concept. So, for what it's worth, I applaud and try to help people doing it on their own. We'll talk about it in a minute. But I just want you to keep in mind, I didn't think it was a good idea at some point. So yes, I respect someone who wants to learn on their own as long as you're smart about it. 2 comments, then we're getting on to the 10 things. Number 1, understand that this is not like looking up the answer to a riddle. There is no single eureka moment. You can't Google how to trade and learn. It's more like learning how to be a lawyer, a bricklayer, an electrician, a doctor. It's a skill. So just keep that in mind. So many people take it too lightly. They think this is so simple. Obviously, it's not. The vast majority fail. Stop every once in a while and do an honest assessment objectively. And this is what I really ask people to do. Especially if you've been serious. It's one thing if you're just sticking your toes in, you're working another job, you don't really care, then I'm not talking to you. I'm talking to somebody who is really making the effort to learn this, and they have a goal to learn it. And you've been seriously at it for a couple months. Stop, do an honest assessment. How long have you been trying? How much progress have you made? Are you making money now? When do you expect to make money? And most important, what are you doing to improve? Because there's that saying about insanity, right? Doing the same thing over and over again and expecting a different result. Don't fall into that category. It's not a good thing to do. Those are just some preliminary comments, and I'm going to go right to the top 10 here, if we're all set to go, all right? And now the 10 best tips. This was tough. If you made me pick 20, I could probably pick 20. If you want me to pick 30, I could probably pick 30, and probably by next week I'll be sad I didn't put something else in here instead of these, but I just kind of did them on the rip as they came to me because, whenever I start thinking about a presentation, this stuff just kind of piles into my mind and I can barely write it down fast enough, so I just went with my initial gut there and saw how it was. Newbie tip number 1. Technical analysis is all there is. Day trading, swing trading, long-term investing, yes to all of it. Nothing changes when you long-term invest. Technical analysis is all there is. You may not agree or believe me, that's fine. You will eventually agree with me or believe me at some point if you're going to stick with it. Um, there is just no question about it. It's about odds. If you think that it does not work, you've never learned technical analysis. Technical analysis simply works, period. I'm going to go fairly quickly to number two because number two really, in a sense, is a cousin to number one. And it's just re-emphasizing it. When I say technical analysis is everything, what it kind of means is that news and fundamentals are evil to look at. That's some pretty strong wording. And again, some of you may already know this. Some of you may be very curious in listening to me saying, wow, I've been thinking this, I'm not really sure. And some of you may think I'm a little wacky, and that's okay too. This is another way of saying the first point. If this helps you, it's not that these things, fundamentals, news, are irrelevant. It's that the market is the greatest forward-looking synthesizer of all forward-looking events. They are built into the price to an unknown quantity. And this is why so many people get flustered by stocks dropping on good news, the market going up on bad news. How can all this happen? It's because there's no direct correlation. It's an indirect correlation, or it's a lagged correlation. And the lag is something you can't see in the news report or in the fundamental concept, whatever it is. And naturally, those of you who are at the, if you enjoy these topics, you know, some of these are overlapping some of the things that I talk about in the Mastering Technical Analysis intro class, which you're all invited to every, Friday every 6 weeks or so. And again, if you are curious about that or anything else, you can always visit the calendar page at DTS, where you can see generally for the next 3 months, or it's always 3 months posted at once, and you can see the events like this coming up and anything else that you want to see. That calendar page is right there. It is not, these things, fundamentals, etc., are not only not needed, it is actually bad to look at these. Why is it bad to look at these? Or if you can't even fathom that question, why do you think I think it's bad to look at these? Isn't more information even better? Why do I feel it's bad to look at these? It may cloud our judgment. It clouds. Chris obviously agrees with me because he's saying first person, I find it clouds my judgment about what's happening right now. Exactly, right? That's true too, Jim. I mean, all news is old news. Well, there's an exception, and I think it says it here. The word is shock value. There's occasional thing with shock value. But even shock value news, you can't trade that based on listening to the news report. It can be a wonderful thing on a chart because a chart can tell you if it has shock value or not. Evokes mind clouding motion, right? Synthesizing all kinds of information is great, but here's the key word. You have to synthesize all of the relevant information. And listening to or focusing on irrelevant information can actually cloud your judgment. People who, just as an example, a couple days ago, Peloton, gapped up because they had great news, whatever it was, new product, new sales, whatever it was. You look at the chart, and I felt it was a mildly bearish gap. I never traded it that day. It wasn't clear enough to me in either direction, but it was a mildly bearish gap. But if you get the emotion in there about, oh, I love Peloton and what a great company, and look at this news, you probably couldn't short something on good news because it doesn't make sense to you. It's contradictory. It's against your human nature to short good news on one of the nicest companies in America. But no matter what it is, it's the chart that tells us what to do. And enough for that today because that's one of the topics we talk about on Friday a little bit. And if you were there, I don't want to bore you. Number three, again, these are to me the top things you have to get your mind wrapped around if you want to make money. And again, this is not just day trading. This is day trading or long-term investing. It's the same topic. Nothing changes. We don't pull out and start looking at fundamental news on a stock because we're going to hold it for weeks or months. Doesn't matter. The only thing that matters is that if you're holding anything overnight, there are certain risk-adjusted things you want to be aware of in terms of how many shares you're holding, in terms of the volatility of the stock. For example, you do need to know that a biotech stock may gap up or down 60% the next day because that's their nature. But other than that, nothing else changes at all. Number 3, risk management is not just important. It is more important than your right arm if you're a trader or investor. I keep hearing silly comments. There's a matter of fact, one of the very famous financial things years ago, and I think it's still around, the IBD whatever top list, and they had this great rule, right? It wasn't when you're down 7%, you get out of a position. Stupidest rule I ever heard in my life. Not that I'm against risk management, very much for risk management, but a random 7% concept is completely irrelevant. It has nothing to do with anything. And who would lose 7% on any one trade? That is insane. That is just wacky, crazy stuff. We don't make crazy assessments like that. There's a very specific way we manage risk. Again, it's the same thing whether you're day trading or long-term investing. Let me read this, and I'll go on to my comments so I don't overlap them here. Get out when the stock moves X%. Another ridiculous comment. You know, there's some stocks, it would take it a week to move 2%. And there's stocks out there that move 20% every single day. So how can you say there's a percentage that matters? What matters is the chart. That is what matters. No trade is guaranteed. It's all about odds. If you don't understand risk management, you could have more winners than losers and have your winners with bigger moves than your losers, and you can still lose money. That is sad. Does everybody understand how this is possible? Does anybody understand how this is possible? You can actually have a winning record, so to speak, and pick more winners than losers. Your winners could have bigger moves than your losers, and yet you can go home a loser. It's not only possible, it's what a lot of people do. Did it? Yeah. Well, the reason is because people tend to emotionally change their bet size. I want to call it a bet, and I think that's a good way to look at it. When we talk about risk management, forget about percentages and all that other stuff. It's very simple. We have a chart, and our chart tells us what our parameters are. And then you take share size such that you have a fixed bet on any similar trade that you do, right? So the chart tells us where we could be in, could be out. And then we take share size that puts a fixed bet. And I like the word bet in this case because it is what it is. In other words, if you go to the blackjack table and you make a bet, you lose your 10 bucks. You don't lose $300 in one bet. You have the right to make another bet, but you don't suddenly lose $300 on one bet, right? You have the right to double that bet once in a while. And it's the same thing in the market. We take a bet, if you will. And of course, in the market, just like at a blackjack table, you want to get the odds in your favor, and it's easier in the market than it is in a blackjack table. And then, of course, in the market, we have the ability to have our winners bigger than our losers, which is not an exact equivalent. But that's what risk management is about. And if you don't get risk management, you'll be out of the game. You just have to. And it's not all that difficult. Risk management is an integral part of technical analysis. And as I just explained, risk management is hand in hand with technical analysis. That's why these insane rules about lose X amount of money. I mean, yes, we're going to fix our amount, but it's not going to be based on just randomly, well, let's just take a bunch of shares and when we're down $1,000, we'll get out. That's insane because you'll have no odds whatsoever. Charts give us a pattern that tell us where we're likely to start failing rather than being successful. And somewhere in that general area, when the reason we got into the stock on a technical basis is no longer valid, we want to exit. We want to fire that employee, so to speak. And we don't give it a lot of warning. We don't give it a lot of reprimands. We give it one reprimand, then we say, okay, you're out of here. You didn't do what I wanted you to do. D. King wiped out my profits. Even the strongest stock could be pulled on my door. Yeah. Well, Jagdish, I mean, you'd probably love, well, I don't want to sound like I have something that I teach, you would love the slide, and it talks about bad relative strength. You probably don't know what that is, but there's a thing called bad relative strength, and that's what that was. You may have stocks that stay strong when the market drops, but if the market goes into a death spiral, it'll drag stuff down. So it's bad relative strength. You probably heard me say the term a couple times, but that's what it means. All right, number 4. We're not doing too bad on time. Trade management. Now, what's the difference? Well, risk management means how you tie the money to the trade. It's the money. Trade management means where do you decide to get in and get out of things. Good chart readers are a dime a dozen. You have to learn how to get the money into the bank account. And this is what a lot of people fail to do. It's a big part of learning what to do. Getting from point A to point B is tough for many people. It's where all the psychology, well, most of the psychology for most people comes in. Because this is where two things happen. Number one, when you're in a trade and you're making a little bit of money, what's your immediate fear when the trade starts? Actually, from the time you enter, what's your immediate fear from when the trade starts? Everybody knows this one. What's the fear? You enter a trade, bam, starts to go up, then all of a sudden it turns red a little bit on you. Yeah. Yeah. The fear is, what if I lose on this trade? What if it goes against me? And guess what? Once it's green, guess what happens? You feel like a winner. And you know what you don't want to do? You don't want to lose that feeling. So oftentimes winning trades go out for pennies because somebody wanted to not turn a winner into a loser. Somebody told you, some not so intelligent person told you that turning a winner into a loser is a bad thing, so you never do that. Well, if you're risking $500 and you're up $30, that's not a winner. It's nothing to protect. You have to learn how to manage properly. Trade management, according to me, involves managing the entry and the stop in many cases. I had the other thing that we have a hard time with, of course, is that anytime we start approaching a target, we start looking at the bigger concept. One of the things, before I talk about that, let me give you an answer that helps people sometimes. The answer is this: when I get into a trade, whatever risk amount I have, I just mentally assume it's gone. Like I spent the money. Went out to dinner, bought something, whatever it was, boom, the money's gone. That's how I look at it. Now, somebody said to me once, well, you're being negative. No, I'm not being negative. But it just instills a mentality in me that says, you know what, that money's gone. And if at the end of the day I get some of it back, I'll be kind of happy. A partial loss. I didn't lose it all. That's great. And if it turns out an investment for me that makes money, then fantastic. So I don't know if that helps people sometimes, but sometimes little comments really help it a little bit. If you are afraid of losing what you're risking too much. It can't be that painful because you have to be able to manage over X number of trades. In other words, we're not going to have all winners, right? If you look at trading, and by the way, you can do great with a 50% batting average as long as you're making more than you're losing. But do you know that even with a 50% batting average, do you know that 1 in 32 times you could have 5 losers in a row, right? Any good probability of statistics people in here? Correct me if I'm wrong. 50% batting average, you can get you get 5 losers in a row. That happened to you 1 in 32 times. Now, that's not that often, but it's every month and a half. You know what it's like to sit through 5 losers? It's not fun. And if you are new, that'll probably screw you up for a long time because you won't know the difference between, gee, was that weird event where I got 5 losers in a row even though I'm a good trader, or do I need to change everything I'm doing? So it really plays with you if you're a new person. It makes it tough. As you start to approach a target, give me a 1 whenever this sounds familiar to you, because this is part of trade management and why it's so psychological. Give me number 1 when I'm about to explain, if it sounds familiar to you. And I don't care if you're long term or you're swing trading, it doesn't matter, or day trading, it doesn't matter what you're doing. I didn't explain yet, Jim. Jim knows what I'm going to say already. You probably do too, by the way. You take a trade and it stops out. You lost your risk amount. Okay. Well, I get that. Some trades stop. You take another trade and it stops out. Okay. I'm down 2 trades. You take a third trade and it starts doing well. You have a nice target out there. You're on your way to the target and it starts to hesitate a little bit. And as it hesitates, you look over and you go, you know what? I'm down 2. Let's say you're risking $500. You're down $1,000. And you know what? This trade's up $800. If I were to just sell this now, I'd kind of be break even and I'd feel pretty good about that. So you sell it. It goes on to be a $2,000 winner, but you sold it at $800 because your mentality was, well, if I could wipe out those other 2 trades, I'll feel good about things. Does that sound familiar to anybody? Come on. I know these patterns. I've dealt with them myself. I've worked with a lot of people on it. And if you think about it, listen to this real carefully. If that's what you do, you have the goal of trying at your very best to break even, correct? That becomes your goal. That's the best you can do. You're not even on a train that could possibly take you beyond break even because that's your goal. Every losing trade, your goal is, well, let's just erase the losing trade and I'm happy. And you have to get the confidence, the knowledge, the expertise, the money manager, the chart manager to say, hey, a couple of losers, okay, here's my big winner. Boy, and you know what? I can do what I preach because I did it today to a large extent, and it was not easy. And some of you in the room with me, I had a tough morning today. I got to be honest. It just, I got stubborn on stock, which I don't normally do because it normally fools me, and it just really made a bad start for me today. But I came back holding on to a couple of winners. Home short and the P stock long, PEIX long. And I got to tell you, I mean, it would have been really easy to dump those a lot earlier and say, well, you know what, they're making some money, that'll erase part of it, blah, blah, blah. But, and I hung on, I got the maximum profit out of them. I really did. I did a really good job managing them. And it got rid of the bad morning for me. And if I didn't have that mentality, I would have never done it. It would have been a really, tough day. By the way, there was no particular reason for it. I just got the wrong thing today. It just happens sometimes. But so management is, for those of you that know me for a while, to me, management is just a huge topic. It's because I see so many people, there's a saying here. Is it here on this slide? Somewhere. It just said on the last one maybe, good chart readers are a dime a dozen. And I don't mean that with any irreverence. Learning to read a chart is quite a skill. But anybody can learn that. And my point is that a lot of people learn to read a chart and then they never use that skill to make money. At some point, most new traders get stuck at break even for a long time. And if you look at it, it's almost guaranteed because of your chart management. Ready for number 5? Whittle man, I like that. Number 5. Oh, that's not Whittle, I'm sorry. Forgive me, I apologize. I glanced really quick. I really thought you put Whittle down there. Tip number 5. Leave your ego at the door and start off. What does that word say there? Can anybody read that? Oh yeah, thanks. It was so small on my screen I couldn't read it. Small. Leave your ego at the door and start off small. Prove you can make money on paper and then risk $5 and earn the right to advance. And this is a tough one, and this one I do talk about on the Friday intro class. But it made the top 10 list, so we're going to talk about it again. It's not a waste of time as developing your skills. You never learn while you're staring at the money. There's a funny thing that happens, even people that take a class or whatever, you learn some of the technical concepts, but of course they're not really ingrained in you well enough to make money yet. And then you go out and you risk $100, $200. Not a lot of money maybe for you, but it's money. And it also is now your real trading record. And if you don't make money, you're a loser. And what happens is people start staring at the money and you start managing the money, not the chart. See, what we do as technical traders is we assign a number of shares, we assign a risk amount to the trade, and then we manage the trade. You manage the chart. And what people start doing is they start staring at the money and they totally give up the incredible opportunity to continue to learn technical analysis because they're not looking at the chart, they're not looking at price action, they're not looking at everything they were taught. They're thinking, boy, I'm up $100. I really don't want to lose that. What should I do? Is this true, folks? Listen to that comment again. Tell me if you agree. When you are risking more than you're comfortable with, you no longer are properly using technical analysis. You're not entering correctly and you're not managing correctly. True? And how can you possibly continue to learn? So it's incredibly important that you start off on paper. I know that's boring. And by the way, I do not advocate staying on paper long at all. Depending on how much you're working at it, 2 to 6 weeks. Don't overdo it because paper trading is great for one concept, but it's also worthless to another extent. But then the key is you go and you risk $5. And all I ask people is this: if you're so good that you want to risk $500 right out of the gates, just prove it to me. Make money at $5, right? It's going to take you a week to work up to it. So just prove to me you can make money at $5, $10, 50, 100. And you know what? If you can't make money along the way, guess what happens? At the end of a bad month, you lost $200. Who cares? There are a lot of sad stories out there from people who start off too big. And I think some of you know this next question I'm going to ask, right? If you start off and you're risking $200 because you don't feel like that's a whole lot of money for you, at the end of the month you're down $4,000. And what do, everybody? When you're down $4,000 and you haven't had a trade rate in 3 weeks, what do you do? A, you regroup and you go back and start over using a low risk amount. Or B, you double down on every trade and risk $400 or $500, $600 so you can get the money back as quick as you possibly can. What do you do, A or B? Everybody does B. And that's where you dig a hole into your account from which you never recover. You're supposed to do A, but everybody does B, is the truth of it. And as a newer trader, you can't dig yourself out of a hole. It's almost impossible to do. So you have to start off properly. At the end, I will give some video recs, and one of the video recs deals specifically with this topic. And I don't want to pick a favorite, but this certainly could be a favorite video. It's actually from a while back, and I'll point it out when I get to it. But it talks about the two evils of starting off too big and then never getting big enough when you could. Number 6, a losing trade does not make you a loser. I gave you a little foreshadowing of this one. A losing trade is an integral part of a winning trader or trading plan. This is hard for successful people to wrap their heads around. Charts, math, psychology is what this is about. It's not about engineering or architecture. Engineers and architects get frustrated because they want everything to be an exact number, percentage, hit a line, bounce off a line, whatever it is. And trading is not like that. It's like it to some extent. We want to make trading as objective as possible. We want to make trading as architecturally sound as possible. But it doesn't follow the hard rules like that. You have to have some soft topics. You have to have a little artistic skill in there to trade. It's what learning a chart is all about. It's what the language of charts is all about. And you don't have to learn anything perfectly. You have to learn things well enough so that when you see odds, that you can properly institute math and probabilities and make money. That's all you have to do. One of my favorite sayings in trading, I wish it was mine, but it's not. It comes from Douglas. And the saying is, I'd rather make money than be right. And some of you don't get that. And I understand that because you think, boy, to make money, you have to be right. And no, you don't actually. The whole concept right now in the marketplace, let me touch on that just a moment. The most common thing I get sometimes from somebody who, is not subscribed to anything is kind of, gee, is this the top in the market? And you know what? I could probably tell you better than anybody out there when it is. But it's not about that. It's about how you handle the top. Because you can come out a winner even if you're wrong. So it's a whole process of how you handle things. It's having the technical skill to know what's going on, and then how to make money even if you're not right sometimes. And that's the whole process that it is involved in trading to me. Hand grenades, not snipers. I like that saying a lot. Most of you, when you start learning technical analysis, again, if you feel like typing, type a 2 on the screen. If you've ever heard this before, or if it sounds familiar to you. That here's what technical analysis is. That we have some strategy, and here's our entry to the penny. When we get in, we also know that we have a stop to the penny. And we also have to find our target, and our target is up here to the penny. And the target must be 2 or 3 or 4 times our risk amount. And then we take that trade, and that's what we live with, right? You ever heard that before? Well, this may shock you to hear me say this, but that's how you lose money, lose money, lose money. Most everything you've probably learned initially is probably enough to get you to lose money at a fairly decent rate if you're, just not getting the right information. The market is not about pennies like that. It's about handling areas. And that's why I like the term hand grenades, not snipers. Number 7. Whoops, what does that say? This is one example where successful people may have a disadvantage. There is a problem sometimes in that people like myself when I started who feel they're pretty competent and smart and can learn things. You don't like to be a loser. And it can be very difficult for people to come to this arena where they can just lose without doing anything wrong, so to speak. And it's a difficult thing for people to get beyond. Number 7, the worst comment that you can hear. I live in Florida, and we have an investment advisor maybe or something. I don't know what they actually are. A fund? I don't know. But they're on the radio all the time here. And they come on and they say, they come on and they give at noon, they give the market report for the prior day. It's the most boring, this guy, I don't know why they have this guy. He has the most boring, annoying voice. And he runs through what the market did yesterday on 4 different indices, like it really matters to list all 4. The NASDAQ was up 1.1% today. The Dow was up 1.3% today. I'm sorry, it's the tech-heavy NASDAQ. You know he's got to say that, right? When you are an announcer or you really want to show off what you're saying, you always have to say the tech-heavy NASDAQ, which isn't even really all that true anymore as much as it was. And then when he's done, here's the comment that he says. Here at blah, 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 I don't need to say the company name, we monitor all the events, including the COVID-19 situation, the election, the economy, and we provide our investors with a periodic letter to explain why the market is moving the way it is. That is the worst thing anybody could hear, say, be told, or anything else. And of course, they have a special name for their letter that, of course, only goes out to their subscribing clients or whatever it is. There's nothing worse in the world because you start to believe that prices move because of what's being said. And again, I don't want to get too far into this because this is the topic, again, that is talked about on Friday a little bit. But, at the end of the day, the market does what it does based on supply and demand. And then at the end of the day, they look for a news story and they say, okay, here's why it went up today. Because Tampa Bay lost the football game yesterday. I mean, it's just kind of crazy. But to a new person, it sounds very valid. It's like, wow, okay, what? Okay, I better pay attention to interest rates or better pay attention to the GDP because the market dropped because of that today. No, the market dropped because it was time to drop, and the excuse that day was the GDP or whatever number came out or whatever it was. I like to know why things happen just because I'm a human, I'm talking about me personally, because I'm a human being on planet Earth. But never listen to things like this for trading and investing. It's a fallacy and will only confuse you. They never tell you what will happen. They only why the past did. Sorry, that got covered up there slightly by that little cartoon. This is so easy to prove, yet so many fall for it. And again, I don't want to go through it today because I'm trying to get all 10 of these out and just give you the highlights here. But it is just irrefutable the way you can prove this. And it's funny, if you really pay attention to it, it becomes comical day after day after day. And by the way, since I've been asked this before, I want to be very clear. I am in no way ever, well, I'm not talking bad about anybody, but financial planners can be great people. They have nothing to do with the market per se. Financial planners, because I've been asked this a couple times when I talk about brokers giving bad advice and mutual funds losing money and all that stuff. Financial planners are a totally different concept. That's a person you go to and say, look, here's the money I have and here's the money I make and I want to retire in 20 years and blah, 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 blah. They're great. Those are great people. If you want to use one, that's fantastic. At some point, they will say you should have X amount of money in the market, and they may recommend you to go in some mutual fund. That's where you can then say, well, okay, I appreciate that, thanks, but going into a mutual fund is probably one of the worst things you'd want to do. But they're great, is just to the extent that they recommend the market. There's probably better ways to handle the market other than something whose goal is to not lose as much as the market does when the market drops. This is not about financial planners. Sorry, I thought that was up there for you. Moving on to number 8. And again, I almost think people are sick of hearing me say this, but I keep constantly. Let me tell you, and I think a couple of people are here listening to me, but I've had probably 4 people in the last 3 weeks. They're almost the same story. It's kind of like doing well in life, would like to get involved in the market to make a little extra money, don't even have to make a living, look around, decide what to do, say, well, some of these programs are a little expensive. And Paul, yours is a little expensive. I think I'll go out and play around for a while. And then they buy several cheaper things that end up adding up to more than what a program is. And then they lose some money. And then they lose some more money. And then pretty soon they're sitting here saying, gee, kind of wish a while back I would have just done the right thing in the first place. But I keep hearing what people turn to. It's almost the last step always. It's hysterical to me, but it's almost always like the last step is, oh, yeah, I started using technical indicators. I have this great system and this whatever, you buy a software program, it's only $100 a month, and of course it's worthless. I mean, just common sense. Very smart people who would never kind of think that could really be true start going for stuff like that because it's this holy grail concept. You get frustrated. It's described well in a book by Nick Darvis, I think it is, How I Made $2 Million in the Market. He kind of goes through this whole process mentally, what people go through sometimes. And you get frustrated and you start saying, you know what, I spent too much time with this, I don't want to learn it, just give me the quick fix. And there is no quick fix. And it gets more frustrating. Technical indicators are worthless in terms of replacing a strategy or an entry concept. There is no indicator that will make money for you by following an indicator. And by the way, I don't belong to some religion or cult that's against indicators. If I thought there was one that worked, I would use it in a second. I would gladly tell, even if I didn't tell you now, if it was a secret, I would say to you, boy, you know what, if you take my seminar program, I'll teach you this great indicator. But you know what, there is nothing that works. Most of you know that already. Because I had an article a long time ago that I lost that I wish I hung on to, and it was from a very intelligent math person who explained why it's impossible for an indicator to work, because the market is a zero-sum game. It's like me inviting you all over to my house, or inviting 60 of you over to my house for a poker game, and saying, hey, I got this great new game we're going to play. Nobody walks away a loser. We all make money. You kind of scratch your head and go, some people may believe it the way politics runs today. It seems to be that's the new prevailing theory. But believe it or not, the market is a zero-sum game. If there's a winner, there's a loser. Now, technical indicators can have a couple of purposes. Number one, if you are using a scanner of some kind, whether in your trading platform or whatever, that's how you scan. You have to put in parameters, and you look for things that are above a moving average, that are hitting the 10 CCI, that are above a Bollinger Band, but it creates a watch list for you. And a watch list without knowledge is worthless. It's like a gun with 50 bullets in the hands of a blind person. It's just worthless. But if you know what you're looking for, creating a watch list can be a valuable tool, and they can be used for that. And also, you can use it to keep it out of a trade or as a visual guide. I have moving averages on my charts. It's the only technical indicator that I have on there, and it's barely a technical indicator, but it is. But I do not use them for any kind of entry concept or real strategic concept. It doesn't mean anything when moving averages cross. It doesn't matter if you think exponential are better than simple, or there's a third type out there, I forgot what the name of it even is. But none of that matters. Nothing's better than anything else. They're all just a visual tool I like to put on my screen just for a reference point that helps me better read the trend of a stock. There's a purpose for me, but is in no way any kind of buy signal ever, anytime, anywhere, any place. You'll never make money doing that. I can say that very confidently. You'll never make money doing that. I've been saying that to every group I've talked to when the topic comes up since the beginning of time, and nobody's ever proven me wrong. Nobody's ever sent me the magical bullet, because you know what? We'd be using it. And then it wouldn't work after a period of time. All right, going on to number 9. Unfortunately, they're often turned in desperation to the Holy Grail because they are easy and objective. Number 9, oh boy. Number 9, I need you all to ask any young children to leave the room, and also to set your coffee down or any beverage that you're holding, and brace yourself, put your hands on the desk, because this is going to be a real shocker. Anybody with any serious medical condition should maybe also leave the room and come back in 5 minutes. Tip number 9, are you ready? To conquer the market or trading, investing, whatever you want to call it, you have to think of it as a video game. A video game. I don't mean that sarcastically. I don't mean it humorously. I mean it in all seriousness. It makes perfect sense when you think about it. Like it or not, it's true. To think of it in any other way only costs you money. What do you guys think about that? What do you think about that? It means that we are just simply reacting to what's happening on a screen in front of us. It means that we are devoiding ourselves of our brain power to say that, wait a minute, I want to study this stock and I want to know who the CEO is and I want to understand how much money it makes and I want to know what product they make. What do you think about this? Comments. Go ahead and yell at me. I'm perfectly willing to and would love somebody to tell me I'm an idiot. I really don't care. Well, when you think about it, keep giving me some comments, but I don't think it's just interesting. I think it's a flawless way of looking at it. Think about this. Well, I don't want to use you as an example or my glycerin tablet. Here's the way I look at it. Because if you don't look at it this way, here's the way you look at it. No, let me do it this way. I look at it this way because here is how I view myself. I am too stupid, and I have such a complete lack of understanding about a stock on a fundamental or a news basis that I wouldn't possibly know what to do. I'm not smart enough to say, you know, the stock's trading at 22.32, but you know what? I think that's wrong. I'm not smart enough to say that the rest of the entire world is wrong, and I'm right. The stock's trading at 22.32, but you know what? I think it's worth $25. I just think it is because I'm so smart. I can't think like that. I want the chart to tell me what the stock is worth, and I want to follow that pattern. I want the people out there who think they know what they're doing to prove to me what the stock is worth. I want to see the people who want to sell the stock come in and sell it. And I want to see the people who come in to buy the stock come in to buy it. Another analogy I could give you is it's kind of like watching a football game for 1.5 quarters and then making a bet on the game. So team A starts off and they go downfield, but they're 4 and out. Next time they get the ball, they're 4 and out. Next time they get the ball, they're 4 and out. You sort of say, hey, you know what? I kind of like Team B. I think I'm going to bet on them. That's what we get to do watching a chart. We get to see these battles. We get to see who's winning or losing. And by the way, there's winners or losers across different time frames, which you have to synthesize. And then we place our bet, so to speak. Right? Makes sense if a fundamental trader, not so much technical and not having good judgment, that losing money is real. Okay, Cross, good point. That's not at all what I meant. I didn't mean there's no money attached. I just simply meant that we're reacting to the screen in the computer. In other words, to trade, all I want in front of me are my charts. That's all I want, just like a video game. You come up, you pull up your charts, you look at what you're doing. You're not listening to news. You're not listening to anybody talk to you about it. You're just simply saying, here's the chart and here's what I want to do, as if you were playing a video game. No, certainly I didn't mean to imply that there's no money attached. But that was a good point if you didn't get that. At the very least, start thinking in that, because to think any other way, I think across the board is only something that's going to get you in trouble. Exactly, Cross. That was my point exactly, right? Because the truth of it is, there is only one spot that there's truth in the market, and that's the prices that print when a transaction occurs. And those prices get written on a tape, and the tape turns out to be a chart. And the chart is the only thing. So the great thing is, people will sometimes tell me that, oh, they got ripped off in this market maker, and the market's a racket, and there's cheating, and there's this, and you know what? None of it matters. You know why? Whatever cheating or whatever nasty things are going on, they all show up on a chart. They're all there in front of you, whatever happened. And you see the patterns, day after day, week after week, minute after minute, whatever it is. And whatever is going on, you can get to learn the pattern. Case in point, years ago when the high-frequency trading machines hit the screen, everybody was just all in a huff because they're in a trade and they get taken out. And day after day after day, the same thing happens to them every single day. They get taken out by this machine, as they call it. And, oh, the machines are back. Well, you know what? If that's what happens every day, why don't you sit there and wait for the machine and then play with it? You play with the power in the market. You play with the money in the market. Here's the little catchphrase here. We are not here to tell the stocks or the Forex pair or the market, whatever you're trading, where to go, right? That should be where. There's a first typo, I think. Quite the reverse. Does that make sense to you? Because think about it. If you're not believing this slide, you're doing that. We're not here to tell the stocks where to go. The stocks, the market, are never wrong. You agree with that? The market, the stock you're looking at, is never wrong. You can't ever say at the end of the day, boy, that stock was really messed up today. It was wrong. The stock is right all the time, 100%. I guarantee you, only you can be wrong. Only I can be wrong. And we are wrong sometimes. But we try to learn and continue to get right more and more often. Number 10. I didn't want to leave. I was going to put that last one as number 10, but I didn't want to leave you on that note. You don't need to master everything. Even though I have tried to convince the room that if you yell the proper way and use the proper wording, that you can tell the stock where to go. I'm not convinced I've conquered that yet, but I think it's doable. So, number 10, you don't need to master everything. You need to be pretty good at everything and master one or two things. And this comes from the comment where sometimes people are just kind of afraid. They're like, wow, Paul, I listen to you and I can never learn all that. Well, you don't have to learn all that. You don't need to learn even a fraction. You do need to learn everything fairly well. This is the same topic as the KISS thing, right? Keep it simple, stupid. I believe in keeping things simple, 100%. But before you can make things simple, what do you have to do first? And this is just such a huge point, and I think it applies to anything in life. Certainly it applies to trading. Before you can make things simple, what do you have to do? Yeah, you have to kind of make it complicated at first. You have to learn it all. You have to climb the mountain. You have to wrap your hands around all the eggs in the basket. Because if you don't, you'll never really master any one thing. And you know what else will happen? There's a video out there. And by the way, I don't think this is one of the videos I recommended. But there's a video that has this in the title, The Grass is Always Greener. And it's a huge problem. If you don't really kind of learn everything and then focus on what you love, you're always going to think there's a better way out there. I have a long story that goes with that, but I don't have time with that. So you need to go out and learn everything fairly well. And then you need to zoom in and focus and master a couple, three things. That's the way I teach things. That's the way it should be. So you don't have to have infinite skill across the board. You need to make money. That's all you have to do. You need to make money. To do that, you need to learn certain things. But you don't have to master everything there is about the market. This is called making it your own once you learn the basics. And I put basics in quotes because, very careful the way to use basics is a relative term. The basics is probably way more than most of you think it is. The basics includes a really in-depth understanding. If you remember the three-legged stool thing, I call it superior technical analysis. You have to learn it really well. But you don't have to master it, and that's why I put basics in quotes. You just have to learn technical analysis really well, and then really zoom in and master a couple of things. And no, it doesn't take that long, and it only requires the intelligence, the mental capacity of a fifth grade person. It really does. And I don't mean that, please, I don't mean that in any kind of degrading way if you're struggling with this. But I think you have to agree, if you're struggling, it's not because this is such complex stuff, right? It's not like you're learning string theory or the beginning of the universe or integrating numbers. It's not that complicated, right? Don, the light bulb one for me, learning to trade, was when you went over the 4 steps of learning, page 1. Ah, thank you, Don. And actually that I'm sure I referenced, and I'm not sure where you're talking exactly because I can't remember all that, but obviously those 4 steps are not from me. That is regurgitating something. It's out there already. But I think it applies very much to trading as well, too. And I took and I lined up the 4 steps of learning and exactly how it applies to trading and where you should be at each level, so to speak. So that's number 10. Are there any questions on these? I'm going to keep going here, but feel free. This is time for questions. What I'm going to promise you here, best videos on the free stuff page. Yeah, I wrote 2 books. I don't even recommend them. One of them, I'm the byline author, even though I wrote the entire book because I didn't have a real name. And the other book, was ghost written by me. The top three books I recommend, none of them would be mine because I actually didn't have a lot of control over what I was writing. They were done by or through other people. Best videos on the free stuff page. What is the number one book I suggest you read, by the way? Nope, not Elder. That's number 2 and number 3 for psychology. Take a look on the other stuff page. Top of the page is the best movie you should watch, and down below is the best book to read as a trader. You can click on that and go find it. Best videos on the free stuff page. This is a tough one. It may be a little subjective, but they are all a must watch. While they are on the free stuff page, they're all required watching for the DTS Seminar program members. They cover a variety of topics. I want to emphasize that, folks. These things on the page, they're not sales things at all. I don't do sales things. Now, yes, if you listen to all of them, there may be 30 seconds of me saying, gee, I think you should maybe do this. But these are just educational information. And the people who do take the seminar program, I required them to listen to all these. It's kind of a task if you start with me late because there's a lot to listen to. They all have titles that give you a good clue of what they are. For the most part, there's a couple of weird titles I picked, something about umbrellas one time and whatever. But what I thought was, since there's such a huge number of them out there, somebody said to me, gee, if I'm new, where should I start? Well, if you like the topics from today, I picked the top 6. And by the way, so you don't have to frantically try and go find these or write them down. You can. But I will have an email sent to everyone that will have these 6 videos outlined if you want to find them on the free stuff page or if you want to direct click to YouTube. Every video that's posted goes at the same time to the DTS website and also goes to YouTube. As a matter of fact, let me just, here's the website. And if you go here to the free stuff page, click on free stuff, ding, and once you're on the free stuff page, the videos will start. Now, we take and move the videos after a period of time to the archive page. So there's a bunch on the archive page. So if you see here, like the first video here, they're all dated, so they're all sequential. This first section is the play of the week, and it starts with the oldest going to the newest. So the oldest one listed here is from 2019, 9/22. Prior to that, you have to click on the archive page. So there's quite a few of these can be taken to the archive page because there's a lot of Trade of the Week videos there. And then we just recently put some of the prior events to the archive page. So the prior events, there's only about a dozen here. So if you want the prior events prior to 19 October 9, you have to go to the archive page. Everybody clear on that? And by the way, when you're on the archive page, it automatically takes you to YouTube. Now these here, you can click on and see them in mini view, or you can click right on the DTS website and watch them here. So if you wanted to stay on the website and watch them, that's great. So I'm going to send you the 6 titles, and I couldn't only pick 6, so I ended up with 8. And you can find them here on the free stuff page. Or if you want to, you can go to YouTube. And if you just go down, it's below where you're seeing. But if you just keep going down here, it's off the screen for you. But there's a YouTube symbol there. Just go down to YouTube. And everything is mirrored on YouTube. Now, it's a different format on YouTube, as you know. So here, when I give you the top 6, if you click on the little icon, it'll take you to YouTube. If you don't want to go to YouTube, it'll be very clear. But of course, the negative on YouTube is that if you want to watch those 6, once you're done with the one on YouTube, you have to go back because, you know, YouTube will take you to the next one they recommend. And there'll be some of mine mixed in, there'll be other trading mixed in, it'll be a mixture of things. So you can do whatever you want. I don't care what you do, it doesn't matter to me. They're both there for your convenience, whatever is best. One little tip is that even if you like watching them on the free stuff page, if you subscribe at YouTube, you'll get notified when it hits YouTube, and when it hits YouTube, it also hits the free stuff page. So if you do want to be aware of these, like tonight's video of tonight's presentation will be posted over the weekend. When? Well, you just have to look or subscribe to YouTube. I really don't care. It doesn't matter to me subscribe to YouTube or not. Could care less. But for your own convenience, feel free. So here are the 6 I tried to make it, but I couldn't stop at 6, and I had to stop looking because I was going to go past 8. So here they are. Oh, thanks, Ritu. Boy, you spent some time out there then, because there's getting to be a lot, you know. There's getting to be a lot. So here they are, and you know what? They're too small for me to read. No, I can read them. Let me just quickly read them for you, because I may have some great last-minute comment as I read them. And I'm not sure these are in any particular order, but from chart reader to trader investor, this is the one that talks about share sizing probably being one of the things that takes down most people, both the way you start and the way you finish. I think it's a must read. Biggest mistakes, and by the way, I wouldn't be surprised if there's a little overlap with a couple things I may have talked about tonight because some of these are obviously important topics. Tips to get the odds in your favor, best and worst advice, tips on management, this is a little more technically oriented, language of charts, confirming what, three-legged stool. Hard to pick the favorites. Now, these are more general topics. If you go and you look on the free stuff page, there will be a lot of topics there that are much more technically oriented. There's some very technical ones on there. So whatever you want to look for is fine. You're not going to in any way touch or encroach on what is taught in the seminar program. These again are all kind of additional topics. But boy, there's long-term trading investing, there's chart knowledge assessment, there's day trading A to Z, there's only 2 times you have an edge, there's one about retesting failure patterns, there's all kinds of good stuff out there, okay? And for those of you who haven't been there, another great source of information like this is when I started the seminar program, the paid for one, the first class, everybody's invited to, all of you. We just had that, so if you're new, you just missed it. It was last Friday, right? Yeah, last Friday. It's called Introduction Mastering Technical Analysis. That's not recorded anywhere, but it is presented live every 6 weeks or so, and you will get invites to that, of course, every 6 weeks. Okay? Quick reminder for you, those of you who want money for prop trading, there is a concept where you can take $5,000 and use $50,000 worth of capital. That may not be for everybody. I don't want anybody to be out on a limb trying to do this, but for some people it makes a lot of sense. They have a full-time, they have a long-term account, they don't want to sell anything, they want to day trade. You have to email me to get information about this. It's not something I do personally through DTS. It's a referral to somebody because I think they have the perfect concept where you can be day trading in 2 days using risk deposit capital and being able to trade for, if you put up 10,000, you can trade $100,000 in and out all you want. Trading in 2 days, your money is safe, kept in the US, all kinds of good stuff. It's not programs or levels. I'm not involved with it. It's just simply go trade your money. If you want to lose it all in 2 days, you can lose it all in 2 days. So email me about that if you're interested. Everybody will get an email about the best videos from tonight, okay? So with that, I think I'm done. I did pretty good. I didn't think I'd get done in 70 minutes. That's not bad. Anybody have any comments, please feel free. Any comments, any questions, anything you want to talk about? It was a lot of quick hit information tonight. That's what it was supposed to be about. Thanks, guys. All right, those of you who are in the room, I'll see you in the morning. And then there's 2 events next week for you seminar program members. We have the practical application review night, and we have scanning for day trades night next week. These are all next week. And we'll be doing an event like this again 2 weeks from tonight. Thanks, guys. Have a great evening. Have a great rest of the week. Take care.